Hey guys, Veteran here from Independent Traders Guild, and I want to do a quick rundown on ES as a follow-up to this past weekend's video, where I basically laid out the game plan for the week, and we're almost on perfect spot. I've been posting charts all week, but a video sometimes will clean it up, and let's just get in here. I'm working off a 1 hour chart just so you can see previous levels, previous zones, how they all work. What we've got here is I got weekly VWAP, the kind of burgundy line. It's just above the weekly supply R1, and just underneath this supply transition zone. Um, I'll take that off. We've got the weekly PWG levels, guys, and these levels are auto calculated off of proprietary algorithm that we use, and we use it in our PVI. It's PWG, and we can run these, and they work on all different charts, symbols, commodities, currency pairs, crypto, bonds, you name it. They work, and all it does is give you an idea. Like in here, this is the conservative high for the PWG this week on ES. If I bring it down just a little bit, the conservative high is at 40.84. It's in a supply zone, and all it kind of gives us an idea is that in the event that we breach this downtrend line right here, working through weekly R3, resistance 3, right in here at 40.36, could be CPI tomorrow. You're going to need to, if you're short this for premium, you want to consider putting on some debit spreads, and selling some call or some put credit spreads down on the other side to hedge this trade. And then when you get this weekly buy target, you got a visual at 40.60. You need to be hedging some 20, maybe 40% of something that if you've sold premium at 40.84. And again, this is ES, not SPX. Again, same thing works. Okay, so that's PWG. If I take it off, boy, the chart gets real clean, right? So we got a downtrend line coming from the high of the year. We've got the blue line. This is the 200-day moving average. Let me see how I can get that up there. That's at 39.51, and we hit it today. You got the 100-day moving average down here at 38.86, which is also the weekly pivot. And then you've got the red 50-day moving average, which is right here at 39.27. So what happened Friday? Last Friday, we came in, we hit the bottom of a demand zone. And again, a demand zone, just briefly, this is going on the internet. So a demand zone, and I sent out a tweet about it this morning. Guys, you got to go research. You got to go read through, all the tweets that I've sent out. I usually don't send out fluff, but the demand zone is where we have demand, because price action has dropped into a point where we think something is affordable. It's a good price. It's beyond fair price. It's a cheap price. It's a discount. So there is demand. Well, when you get up here, and this is darkened because we've breached it, but when you get up here to a higher time frame supply zone, there's an excess supply because you got sellers. You got sellers up here. You don't have buyers. And so again, that to keep that. So we hit that on Friday. That triggered our. We had a trend up day Friday. We crossed over the 100-day moving average. I put a mark here at the top at 11 o'clock. We moved above the 50-day moving average on Friday, and then when we opened Monday, and again in ITG we had talked about this transition zone. We played it to the upside. Some people played it once we broke it back down to the downside. We failed the 50, came all the way back down. We touched the 100-day moving average, and we launched off of that yesterday morning at 07 Eastern time, back to the 50. Again, when a supply zone gets violated, and it gets hit multiple times, it loses its luster and it'll come off. I just leave it on there because it was on last week's. It was on last weekend's preview. And then you'll see that, we got up above, this purple level, 3906. That's the halfback Fibonacci from the August highs to the October 22 lows, and then we rock and rolled. And once we breach the 50, again, right here, this is a 1 hour chart. I'd never do this with a 1 hour chart, but it still works. You got an open high low close above the 50-day moving average. That activates that as long-term support. We come down. The next touch of it, you want to take longs. You can see what we got. Now we're working right here. We're into the 200-day moving average, and we closed right in it the last hour. We sold off a little bit. But again, what we talked about is if we can breach Tuesday's high or Monday's high, we get up here, we come back to the transition zone, acceptance, price acceptance above the transition zone. What is that defined by? A full candle, and this is a 1 hour candle. Open, high, low, close, all above the transition zone. Never touch it. That's price acceptance. And we get price acceptance. We come back down to the transition zone this morning, 10 o'clock, 11 o'clock, and then we launched. And we're taking it up to 200-day moving average. Right now, the 200-day moving average is pretty much the only thing between us and this 4001. That's the 382 Fibonacci from the high of 22 to the low of 22. And then you've got, if we zoom in a little bit further, then you've got 404, which is the 618 from August high to October lows. Again, multiple Fibonacci's is confluence. Okay, up here, we've got the descending trend line from the highs of the year. I'm going to put the PWGs back on. One, because they matter. Two, because we're right at weekly R2. Okay, and our crew knows that when we hit weekly R2 and we get an open high low close candle above it, acceptance, even though that was in the closing hour of trading and power hour, then there's a real good chance we can expect us to spike. Where are we going to get to tomorrow? People are saying SPX at 400 or 4,000. In the event that SPX gets to 4,000, ES is about 20 points higher. So you would put ES somewhere around 20 to 25 zone. Again, not breaching that trend line. The concern we have is with weekly R2, that triggers and opens the door for us to get to weekly buy target 2. And that would take us up to 411. So we're playing calls on our strangle, pushing up here to 415 on ES, which is the equivalent of 39.95 on SPX. In the event that CPI comes in bad and it's higher than anticipated, say it's at 7.1, and we reverse over, we flip over, where are we going to go? I think the transition zone is still, I think it's still valid. I'm not excited at all about the supply zone. It's darkened. I don't think it matters. In the event that we do fall off, we'll run through weekly target 1, and when we hit that, we're going to come to supply. So the first stop for me would be 39.40 tomorrow, pre-market, in the event that it's a sell-off. Okay, 39.40, and then probably down to test the 50-day moving average or the weekly buy trigger somewhere in this 24. Again, this is a tight zone here. 23 and a quarter, 26 and 3/4, 26 half. You're talking about a 2 or 3 point range, guys. When you've got ES and you can able to scalp, 70 points, 60 points, don't split hairs, over. In the event that we breach that, then we're going to come down to the sell trigger. Coincides, there's confluence there with again the halfback at 39.06 and this level at 39.03. In the event that we fail that, then obviously we're going to work back down towards these. And it could be fast. I don't know what's going to transpire tomorrow. I would not be surprised at all. I don't know if I can do this. I would not be surprised at all to see us work up, maybe even hit our head on this trend line, and then come back down, retest the 4,000, and then work and possibly work that. And if so, obviously, I really think we'd be back down at supply at the 39.40 or the 39.20, somewhere in this zone tomorrow. Would not be surprised. In the event that we sell off, As long as we stay above 38.90, I'll be taking longs. Our put side for SPX or for ES, our put side is at 39.40, 39.35, and with SPX it's really at 39.15. So we've got SPX 39.15 puts. We've got SPX 39.95 calls. They're both in profit ahead of time, but that's kind of what we're looking at for tomorrow. And CPI upside. We've got a conservative level here on the PWG. That's automated. Here's the PVI level, 41.27.25 for ES. That's in a higher time frame supply zone. Are we going to get that high? Man, shoot, if it's real bad, I would not be surprised to see retail squeeze. That's what transpired today. We had retail buying. Everybody on FinTwit, I guess, from what I've heard, everybody is bullish. They think inflation is going to come in lower, and that's going to signal an easing in the interest rate tightening and a return to growth in 2024. And everybody's playing long. So as retail plays long, they're buying calls. Dealers have to hedge. Dealers are hedging because they're selling the calls to them. They've got to hedge with long ES. That's why we had a trend up day today. It was an easy day to trade. If you scalped your way up, you made good money. If you bought and you did a buy and hold for the day, you made great money. We added another dozen dollars to the process. But that said, people wonder and keep asking me about VIX. Why did VIX rise today? Well, if you're a dealer or if you're a market maker and you're buying long ES to hedge your calls that you're transpiring, you're going to turn around and you're going to hedge that bet. And they're hedging it with VIX, and VIX is inside 30 days and at the money. And so you saw a climb in VIX and you saw a rise in IV today ahead of the numbers. I think the spot straddle for tomorrow is around 80 points. So they're looking for about an 80-point move in the broader market in the ES. And so 80 top to bottom. I don't think we're going to see 80 from spot, but we could. And again, I think if the number is lower, I don't think institutions. But I do think that retail can drive it up. If you look at some of the big winners today, Amazon was a big winner. But if you look at, Intuit Surgical, they dropped today 4.5%. AMD was off. NVIDIA was off early. Netflix, Meta were off. Those have all run a pretty good race here the last few weeks. Amazon took the lead for the first time since last summer. In the generals of technology, but what'd you see? AMC, you saw Bed Bath and Beyond. You saw a lot of the meme stocks run, and Crocs was up, some 7% today. Tesla was up again. So those that were calling for Tesla sub 100, congratulations, you took a 25% rally to the face. And again, this is a stock picker's market right now until we have a new direction. Keep in mind, you got the JP Morgan collar that's on at the end of the month. You guys should know your strikes. We talk about it often in ITG. But guys, that's it in a nutshell. It's going to be interesting tomorrow. That's one way to delete it. And so join us if you got time. Hit our Twitter, and we'll shoot you a discount code, and you can join us. It'll be fast and furious pre-market, but we're looking forward to it. So everybody be safe. Have a great day, and I hope everybody's off to a great start of 2023. Be blessed. Peace.